I'll tell you, buying a duplex or a threeplex with conventional lending takes way more time and it's way more complex than buying a 30 or 40 or 50 unit multifamily property because, dude, it's like full body cavity search, right? I mean, we're helping some people co-sign on a loan just to help them get into a single family house. I'm like, this is effing ridiculous. It's like a $600,000 house. It's like documents and this and that and PFS and then bank. And you're just like, what? A commercial loan, you go out and they're like, yeah, does the property make sense? Does the property generate enough cash flow to service the debt with a buffer? And most of the credit or most of the weight's put on the property. And not to mention, I would say you probably spend 4 to 5 times more, 4 to 5x more time doing a smaller commercial transaction, which is sucking up all your time to buy this duplex for cash flow that's certainly nowhere near life-changing, where you can spend a fraction of that time, buy a larger property, and actually experience life-changing cash flow. But yeah, to your point, people that are listening, 5 units or more on residential is generally considered a commercial loan. It's and the values it's valued differently based on income. And you're right, like mobile home park, self-storage, 5 units or more residential, office building, mixed use, all of that's commercial lending. And it's a lot easier to get. Now you have to refinance it every 5 to 10 years, which is a pain in the ass, instead of just set it and forget it on a 30-year fixed mortgage. But I would say you can scale a lot faster with smaller property or with larger properties.
Yeah, I love it. I think that, it's funny looking back when this was years ago, we were buying an RV park and I applied I was trying to buy a single family home. I actually got rejected as an entrepreneur because my losses were so great. My phantom tax losses were so great that they wouldn't give me a loan for a single family home. But in the same year, I got a loan for $1.7 million for an RV park. And so it's different. It's different because it's based on the fundamentals of the business and not necessarily all on your personal situation. So you do definitely open a door. Like Gabe said, though, and you clarified 5 units residential housing. So people living in the units is considered commercial. And with that, you're able to step into a entirely different world of commercial lending. You also get the benefit of forced appreciation. Forced appreciation, we've talked about before, every dollar to the bottom line increases the value by 10 to 20 times. So every annual dollar. So $1 extra over the year, you're actually leveraging up your property. And so you don't have that with 4 units or under. You're based on comparables. So what did the neighboring property sell for? Yeah, you can increase value by putting in some countertops or whatever, but it's not the same fundamentals. It's not based on dollars going to the bottom. So commercial, like you said, Gabe, if you're listening to this, don't just think about office or retail or industrial or, a lot of people think commercial is just like shopping centers or whatever. Well, yes, that's true, but it's also 5 units or more residential.
I'm going to give a real life example. And I hope this doesn't confuse our audience if you've listened this far, because I got a commercial loan on a 4-unit property. So I know we just got done saying like 5 units or above. And I know I've shared this example with you guys, but here's why I got a commercial loan. So I bought this 4-unit apartment complex. I paid $475,000. I put $50K down and I got a hard money loan in the 8.5% range. Okay. The rents were way below market, about 50% of what market rent should be, but they still had like 6 months left on their leases. Okay. As those tenants moved out and I got rent up to market rent, and there wasn't a lot of money I needed to put into the property, some paint and some minor things. I maybe put under $10,000 into the property, but I went out and got a commercial loan. So even though it was a 4-unit apartment complex, I was already maxed. Yeah, I was already maxed out on my residential side. So keep in mind, I bought this for $475,000 and the lender asked me to put $50K down. I did. I actually was trying to do a no money down deal. Less than 2 years later, when those rents were up to market, I got a commercial loan. The property appraised out at $860,000. Did I put a bunch of renovation money into the property? No. Did I get rents up to market? Yes. So you guys talk all the time about a lazy reposition. I knew that this property was grossly under rented. This was the first big wake up call when I'm like, oh my gosh, commercial lending. Why did this appraise at $860,000 when I just bought this at $475,000? It's because the bank, being a commercial loan, was basing the value not on what other fourplexes were selling, but based on the NOI. I got rent up to market, and now this $475,000 property was now worth $860,000. I was actually able to pull my money that I put down back out and then some. So I think I pulled out $100,000, got a commercial loan on it, and I have no money into the deal. And it's a long-term cash flowing property for me, probably worth 1.1, 1.2 today, right? But it's the first time I really understood, oh, this is why commercial lending is different. They're basing it on the income of the property, not on comparables, not on what someone's emotionally willing to pay for the property, not because someone's fallen in love with, the white picket fence, but because the numbers supported the property. It's a business. The numbers made this work, and be valued at almost double what I paid for it, not because of comps.
You wouldn't see private equity guys buying businesses and just hoping they'll appreciate. I mean, they value businesses based on a multiple of EBITDA or profitability. Same thing with real estate, commercial real estate. It's based on a multiple of how much profit that's kicking off. And it's true. 99% of the people, investors, stay small and 1% go big. And I would say that's why the 1% maybe has a negative connotation. They're contrarian thinkers. They're like, I like what you said about 10x is bigger than 2x. If your goal is to really scale fast and generate life-changing cash flow, you got to think bigger, and which means you can't spend time looking at small properties, spend an exorbitant amount of time running these tiny little transactions. You got to think bigger. And it always comes back to mindset, which is a huge misconception. I think larger properties are a lot easier than smaller properties in so many different ways.
So, guys, this is a question for you guys. If for folks listening to this or watching this video, what do you do? How do you buy commercial? I think for me, I was exactly this. I was trapped in smaller properties. I didn't understand it. I was intimidated by commercial. So asking you guys, what if someone's listening to this and they want to buy that, they understand it, they get it, but they're like, well, what's the next move? What's your advice to go buy big properties?
I mean, I think to start, and I know Gabe has some comments, and I think we all have comments around this. One is Gabe, you use this example all the time. When you decided you were going to start buying mobile home parks, you literally shut off all your email filters. You no longer looked at anything smaller, right? And so I think a lot of it's, again, time's our most valuable asset. And so if you're focusing your time on finding larger properties, and that's what you're going to find. And if you minimize your time looking for small stuff, that's going to help. Also, brokers. I think I see brokers all the time that really should stick to residential, selling single family houses, maybe a duplex, but they have no business listing a commercial asset. Now, if they do, go after it and look at it because they're most likely don't know how to sell it. But if you want to get deal flow, start talking to brokers that are selling the asset class that you want. Mitch and I went out and we talked to every broker in the country that was selling mobile home parks. And you could go on Crexi or LoopNet, find the brokers that are the most active, tell them what your buying criteria is, and they're going to start sending you bigger deals. And they're brokers that understand that asset class.
Yeah, I'll tell you, I mean, you're right. I did shut off, I literally refused to look at single family and small multifamily when I got into the mobile home park space. But something I may or may not have shared with you guys in the past, I was actually fairly intimidated by commercial real estate in the beginning. In my mind, I was like, people will always need a place to live. I was very comfortable in residential. I had built up a portfolio of maybe 100 units or so in residential, small apartment complexes. But here's how I actually got into commercial. I bought a mixed-use building. It was an apartment building, had 13 residential units, and then 2 commercial spaces. So I actually eased into it. I was like, all right, I got a great deal on the property and the some financing on the renovation. And I knew conservatively the residential actually supported my debt service. And so I actually eased into it because I was like, oh, I don't know about commercial. Then we had a restaurant going downstairs and another commercial tenant go downstairs. And I'm like, oh my gosh, these leases are better. They're paying higher rent. They're good tenants. And then I bought another building that was also mixed use. It was 23 residential units and 2 commercial spaces. So I actually eased into it with all right, I'm comfortable with residential. And I realized these commercial tenants are great tenants. You're dealing with businesses, not only individuals, and they're paying a higher rent. They usually improve the space. So I actually eased into it that way. And then I'm like, you know what? I like commercial. I picked up another property that had a commercial building with 7 multifamily properties around it. So I actually eased into it a little bit. And then I bought my first mobile home park. And that's when I kind of shut everything off and focused solely on the mobile home park space, and then picked up, 9 parks over the next couple of years.